Well, welcome back to Hodl, a crypto at conference. My name is Sriram and I will be your host for this session. Before we kickstart this session, I would like to thank our partners, the title partner CoinDCX and ZPay, powered by CoinSwitch, brought to you by BitPNS, platinum partner Facebook, knowledge partner Global DCA, inside partner Ikigai Law. We are now moving on to our next session on regulatory frame of crypto, a global experience. I would like to introduce you to the moderator of this session, Mr. Sriram Chakravarthi, partner at Rajah and Tann Singapore LLP. Next, I would like to welcome the panelists, Ms. Sean Jones, senior partner, XReg Consulting, Ms. Alma Angotti, partner, financial services, global legislative and regulatory risk leader at Guidehouse, and Mr. Neeraj Khandelwal, co-founder CoinDCX. I would request Mr. Chakravarthi to take over and kickstart the session, please.
Thank you very much, Neeraj. Pleasure to be back on the IMI platform. It's doing a phenomenal job and organizing these conferences and getting these thought leaders on board. So singularly honored and pleasure to be here. Also honor and pleasure to be here with I think some fantastic experts, thought leaders. We have Sean Jones joining us from Europe. Ex-regulator, phenomenal thought leader. I was just telling her that I've had the pleasure of watching her on a number of various platforms. I've learned a lot, and to be on the same platform is a treat. We're waiting for Alma, and I think she should join us very soon. We also have Neeraj Khandelwal. He's a co-founder of CoinDCX, the first Indian unicorn, crypto unicorn. He was very modest about it, but I said it's a huge treat and huge credential that he has. Just a quick introduction before Alma joins us. Neeraj, of course, co-founder at CoinDCX, passed out from IIT Bombay, and he's a financial technology expert, been in the crypto space for the past half a decade. Sean, like I mentioned, ex-regulator, is currently the senior partner at boutique policy and regulatory affairs consultancy XReg Consulting, focusing on crypto assets. Extensive experience in policy formulation, regulatory development, leveraged by government, public authority, crypto asset businesses. She was formerly the architect of Gibraltar's distributed ledger technology DLT regulatory framework, is a former financial services regulator, technical expert on FATF's policy division, dealing with WASPs, and virtual assets, and is also a contributor to Wharton World Economic Forum DeFi Policymaker Toolkit. And that was a short brief that she sent to me. So you can imagine what an experienced expert Sean is and her credentials. I'll make the introduction to Alma, and hopefully she'll join us very soon. Alma is a partner in Guidehouse Financial Services segment, global legislative regulatory risk leader. She's a recognized expert in financial crime compliance, has held senior enforcement position at US SEC, which is the Securities and Exchange Commission, the Department of Treasury's Financial Crime Enforcement Network, and FINRA. She leads fintech and digital assets compliance projects of all types. The session today, and sorry, I should introduce myself here. I'm Sriram Chakravarthi, a partner at Rajah and Tann Singapore, focused on corporate work, but increasingly becoming more active in the crypto space and with Singapore's aspirations in fintech and cryptocurrencies. That's an area that has a lot of promise and a lot of work. So today's session, the session that we are in, is really to talk about the regulatory frame of crypto. And with the experts that we have, we'll be taking a kind of a around the world view in terms of what's happening. There's much happening, both globally and in India in particular. I understand there's close to 900 people in the audience. And so obviously there's a lot of interest in this space from India. The audience predominantly seems to be from India, but I think there's some from the region as well who are joining us. So we'll kick start. And by the time Alma joins us, perhaps we can get started with Sean and Neeraj. Sean, if I could request you to just kick us off with some of your thoughts in terms of what's happening in the regulatory scene in Europe, where you're residing, as well as with FATF, which obviously takes a more global role. Sean, over to you. Sean, we can't hear you. You're on mute. No.
Hello, can you hear me?
Yes, perfect, loud and clear.
Brilliant. Well, going off mute the first time didn't connect me, but I'm here now. Thank you very much for inviting me onto the panel and onto this very significant conference. It's wonderful to be with you today, and for a change to be in a different part of the world than perhaps I usually address conferences at. So I'm always keen to share what the rest of the world is doing wherever I'm speaking. So let me start by filling you in on where the EU is. EU as a whole. And just to set the context, the European Union is actually a supra-state of some now 27 members, plus for these purposes 3 additional countries of the European Economic Area. So you're talking about an economic area of some 450 million people, probably small by comparison with India, but nevertheless a significant market with a very developed financial services sector. And the EU has been pretty late at coming to the regulatory party so far as crypto assets are concerned. It's now nearly a year since a new piece of legislation was proposed. It's a convoluted way of applying law across all 30 countries. So it starts with a proposal that comes, if you like, from the European Commission, and it goes through a process that actually will probably take 2 to 3 years at least before it hits the statute book as a single piece of legislation across the whole of the EU. That very much changes the way that a lot of financial services, traditional financial services legislation works, which is pretty much country by country within a sort of basic framework that's set by the EU. But this is a directly applicable piece of legislation when it comes out. And what is being planned is something that's called the Markets in Crypto Assets regulation. It's an all-encompassing piece that includes issuance, that includes very specific pieces around stable coins, indeed, so much so that it almost defines 2 entirely different species of stable coin, those that are asset reference tokens and those that are e-money tokens, and it sets some different rules, if you like, for each of them. It then also sets out rules that will apply to those stable coins, particularly e-money stable coins that are considered significant. So you can imagine things like what was Facebook, now the DM Association's DM project, what was originally called Libra, that is highly likely to fall within that significant bucket, if you like. And as you work your way through this, there's sort of a baseline of rules for issuance, but then asset referenced and e-money tokens have another set of rules layered on top of them, becoming ever more robust and strict, and then the significant layer on top with the most robust rules applicable to them. And so there's a whole framework there for issuance, as you can imagine, borrowing an awful lot from the traditional space in terms of finding white papers as being a requirement, setting out what should be in them, very similar to what you might expect with securities, with their prospectuses, similar but different. And then there's also a piece around that legislation affecting what are going to be known as crypto asset service providers. So these are folks who are intermediaries, if you like, whether that's exchanges or custodial wallets are the most obvious, but a whole range of other intermediary type activities. And so you end up with this whole ecosystem being regulated from issuance through to intermediation. Now, one of the objectives that's sought here is really more transparency, greater disclosure, consumer protection rules, things like minimum capital requirements, measures to prevent market abuse, which currently, of course, is totally unregulated in most of the world, and really to ensure, I guess, the integrity of this asset class and integrity of crypto asset markets. And so this is just one piece, of course. Just a few weeks ago, we saw another set of proposals come out updating Europe's anti-money laundering legislation. At the moment, there have been a series of directives which, if you like, apply a baseline across the whole EU, and then individual member states have to have their own national laws. But now you have a piece of legislation when it comes in that will apply as a regulation directly across the whole of the EU. Well, there's an update to the directive, a new regulation, a new cross-border agency within the EU, and also an update to what used to be just known as the wire transfer rules, that those rules that say what information has to go with a remittance of funds between financial intermediaries like banks. Those rules are being extended into what is now known as the travel rule, which is the equivalent that applies to virtual asset service providers. And I'll maybe use that as a segue to just talk a little bit about what FATF is doing. So FATF is the Financial Action Task Force. It's the global body that sets anti-money laundering and countering the financing of terrorism standards worldwide. So this is really something which applies to countries, and by one means or another, it effectively applies to every country. All 205 or thereabouts countries around the world are by one means or another bound to meet these minimum standards, and it's why the anti-money laundering rules in most countries are very similar, is because of these standards. And this body has been looking at extending its rules to include what it calls virtual assets. The terms are slightly nuanced and slightly different: crypto assets, digital assets, virtual assets. But in AML terms, they're known as virtual assets. Probably now, I think the first report it came out with was back in 2014 on virtual currencies. Of course, the world has moved on a great deal in crypto since then. And in 2018, it updated its standards to bring virtual assets and what it calls virtual asset service providers into its regulatory, or at least its standards framework that would then apply through regulation at national level. In some ways, it was quite controversial, the approach that was taken, but the reality was it was never going to be left out of the AML regulated space, and this was really the first step to bring countries to do something about it. A lot of countries have, probably about half of them have now done something, but there's still a lot of countries that have yet to do stuff, and quite a few of the countries who've already done some things here have only implemented part of the overall regime. So this thing I mentioned earlier on about the travel rule, this requirement that information about the person who's originating a transfer of value and the person who is intended to be the beneficiary, this information flow is still only being required in a minority of countries yet. So there are some very significant technical challenges around that, and I think it will still take a number of years before we'll see a universal solution. And so you've got rules such as the licensing and registration of VASPs by their, in the countries they operate in, and in some cases, countries are free also to regulate those, to license those who do business into the country. So there's not even a standard on that. Some do both, some only do those businesses that are established in their country and so forth. And so this whole regulatory regime is now, if you like, it's a bit like an avalanche. You start to see the thing rolling, and it's gathering pace and it's gathering in size, and that's really I think a characterization that applies globally. So I'll leave it there, but hopefully that sets a scene for what's happening in Europe and also what are the drivers internationally.
Thanks, Sean. I think that was fantastic. And I have quite a few questions. I'll come to you in a while and seek your thoughts further. But Neeraj, give us a view from an India perspective, what's happening and what are you expecting in the horizon from a regulatory frame?
Thank you, Sriram. Yes, and thank you so much, Sean, for valuable insights and information on the EU region. India is no different when it comes to regulatory progress, right? Today, El Salvador passed the legislation for making it a legal tender, making Bitcoin a legal tender, which is very significant. I mean, I am fascinated by the progress, the lightning pace with which everything is happening across the globe in the crypto industry. And in India, rather than on the contrary, just like El Salvador is considering it as a legal tender, the industry in India, we are targeting for recognizing crypto as asset class, just like gold. The definition of cryptocurrency, what is cryptocurrency to begin with, right? India is more inclined towards, the industry itself. The key industry players are aligned with the fact that we want it to be as an asset class where people can invest money, invest their fiat currencies, and just fairly common understanding as of today. To give you a brief background on the Indian regulatory scenario, regulations.
Neeraj, we lost you for about 30 seconds where you were talking about fiat currency. Maybe you just want to...
Can you hear me now?
Yeah, we can hear you. When you're talking about asset class and the fact of transfer from fiat.
Got it. Okay. So I was saying that India is considering crypto assets as assets class rather than cryptocurrencies, as currencies. So and to give you a brief background on the regulatory landscape and how the industry has shaped up over the couple of years in India, it has a lot of ups and downs. In the past 3 years, we have been through a lot of ups and downs. And in 2017, bull run is when it all started. So the market prices went soaring to $19,000, and Indians got a lot of interest in the industry. We saw initial few millions, around 2 to 3 million people investing in the industry, and that is when government started to take a note. Before that, of course, the government was on wait and watch mode, where it was just observing the industry, how it is panning out, and was not taking any active steps. Before 2017 bull run, there were some statements by the ministry that do not consider Bitcoin for as a legal tender for payments, etc. That is not a legal thing to do. But in 2017, there was a boom of investors. And RBI, Reserve Bank of India, had its concerns, since then, and RBI put a banking ban on the crypto assets, meaning that any companies like us, cryptocurrency exchanges or individual people are not allowed to open bank accounts or have bank accounts, for the business for virtual assets and digital currencies, cryptocurrencies, and that is when that was the first down in the currency in the landscape, the industry fought back on the Supreme Court. We won the case. In fact, it was a 2-year-long battle against the Reserve Bank of India, and the industry won on the grounds of fundamental rights that we should have access to the banking channels. I mean, unless you prove that we have done something wrong or we are doing something wrong, the industry is violating some critical laws, then we should have banking channels, and on the basis of equality, equality of opportunity and all. I mean, we and then the case was won, and that was a turning point again, where the industry was being taken seriously by even the media. Even media plays a huge role in the regulations and all the aspects of how country is shaping up. So that is when media started taking a positive note. People started looking at the industry in a very positive manner. Even a lot of government agencies like Ministry of Corporate Affairs openly came out asking companies to disclose their crypto assets holdings. I mean, they which was very positive, and so things went north, things went into positive direction from a regulatory point of view. We were allowed to open bank accounts, and instantly we were having like 4 bank accounts, in the top Indian banks, which was significant, and thus the industry could grow further. That was very landmark decision by Supreme Court, and the industry could grow further. And today we have 15 million people, 15 million investors by some accounts. We have 15 million investors in India who have invested in the asset class. This is a big number, and the amount of capital invested would be roughly $5 to $10 billion, which the number of people is huge. And as of today, in 2020, I also want to draw your attention to something very significant which happened in March, in March 2000. In the beginning of 21, when the government was bringing a banning bill, a crypto banning bill into the parliament, that we will, which just stated that banning of private cryptocurrencies and facilitating facilitative framework for CBDCs. So CBDC part was good, but private cryptocurrencies we suspect would have included Bitcoin, etc. But the industry was up with arms against that. A lot of debate happened across the nation. A lot of debate on top media outlets, and the bill was not tabled in the parliament. And 2 sessions have passed after that. The bill has not been tabled in the parliament, and we have been listening. We have been hearing some positive comments from the government ministry. Nirmala Sitharaman and other top Indian ministers and officials have indicated that they are open to experimentation. They want to leave a window open for the experimentation, and that is where we are. And recently, of course, some news has been circulating about how the government might identify crypto assets as asset class, or just like gold, how they might want to define it, but no sources as such. I think that's just speculation. But overall, India as a country, as a nation, has come far away from the ban which it was about to put on the asset class. From today, where the government industries, the government corridors are much more matured in terms of understanding of their crypto landscape. And RBI, in fact, just recently announced that they are going to come up with CBDC first phase trials by December, or around that time, if everything goes well. So things are moving in the positive direction, Sriram. That is what I would say at the bottom line.
Thanks, Neeraj. A very comprehensive overview of what's happening. Of course, I think the bill is awaited, and everyone is waiting eagerly for the contours of what that might take place. And imagine if just the anticipation of the bill is contributing to so much discussion. Once the bill comes out, I think there will be a lot more. And on that point, I do want to get your views, both Neeraj and from Sean. Obviously, we're talking about a regulatory frame, and Sean spoke about impending legislation that could come up in Europe, and Neeraj similarly for India. One question that I've always had is, what's the right policy response? Is it sensible to come up with legislation straight off the bat? And does it make sense in an area that obviously these are financial folks who are coming up, having a huge input into legislation? And except that crypto is not just finance, it's technology. And so it's a bit different from, let's say we're coming up and we're regulating derivatives. And yeah, there's a problem to be created. Now let's get together and come up with, some kind of a program that solves this issue. It's not that easy. And I like what Sean said before, where she said it's similar but different. And I think that encapsulates just the fundamental issue that we're grappling with, and regulators would be grappling with the same issue. So in your mind, what would be the right policy response? Should it be guidelines, guidance, industry consultation first, matured approach, sandboxes, and then perhaps legislation? Or should it be we come up with some kind of legislation, regulation, and then we work our way and see how it goes?
Well, there's an awful lot wrapped up in that question.
Yeah.
So I will do my best to take less than 2 hours to answer it. It's a bit like the joke. If I was going there, I wouldn't start from here. And I think that is very true in crypto. I definitely would not start from trying to emulate regulation that was designed for different technology. You will often hear from policymakers globally of every hue, every different domain specialty, whether from the security space or money laundering, central bankers, and so on. You will hear such terms as technological neutrality, for example, and level playing fields, and so on and so forth. And unfortunately, a lot of those are all very laudable objectives, very laudable ideals, but they don't speak to the reality that existing regulatory frameworks are themselves not technologically neutral. The rules that we have today are for the types of stuff that we've had for the last 10 or 20 or 50 years. A lot of financial services legislation was crafted initially at the time when checks were the main method of transferring value from one party to another. That's not a technologically neutral perspective. Those rules were set when paper and clearing systems for paper and so on and so forth were the technology. Then came the early days of computerization in banking. Not quite what we would think of today as digitalization in financial services, but we certainly saw a change back in the 60s and 70s, and then in the 90s and noughties when the internet took hold and financial services of various sorts occurred using the internet. And now we're in the crypto space, and to say that we need to copy what's already there because it's a technologically neutral level playing field approach, I think is simply fundamentally flawed, because the start point is wrong. The start point was never technologically neutral. For me, and I speak as a former regulator, probably somewhat of an unconventional regulator, but in many regulators' eyes. But I think we should be looking to do stuff that is entirely new, that is very much geared towards the technology and the application of the technology and the risks, not only of the technology, but also the wider market and consumer protection risks that are very similar to the risks in the traditional space. But we need to tackle those risks, mitigate against them. You'll see crypto projects that had almost regulation by design, in the same way as we talk about privacy by design or security by design, built in, rather than have to be layered on by imposing rules on various classes of intermediary, none of whom are exactly the same as their equivalents in the traditional space. As I say, it could be a very long conversation, and it does have to be drilled down to the many different policy facets, but fundamentally, I would start with something new that addresses the desired policy outcomes, but using as much as possible the technology to achieve those outcomes, rather than try to impose methods that were applied for entirely different technologies.
Thanks, Sean. That didn't take 2 hours, but love the point on technology neutrality and the fact that we need to look at this with a new lens. Completely agree. Except I think it would require some very mature, some very adventurous regulator to decide and to take the first step in terms of how we're going to do that. And no regulator wants an issue under their watch. And so I think there's a problem there.
I think you have exactly encapsulated in that short comment. Those remarks say exactly why it's not happening. But actually, if you want to support, and many regulators will argue that they're there to support innovation as well, then you actually have to embrace regulation, and you have to be as innovative in your approach to regulation as the innovators. So I'll leave it there with that thought, yeah. But I completely concur with your observations.
Neeraj, your views. Obviously, IMI, I think, has said that they would like, I think they're for regulation from a point of view that it builds trust, and that's completely understandable from an industry perspective. But should it be, the danger with regulation, obviously, is that it could be premature regulation. And so some kind of guidelines, etc., might actually be a better mechanism. What are your thoughts? Just generally, without any particular country in focus.
I think, again, I mean, the top level guide, the top level rule set guiding the development of the asset class of the technology must be very broad in nature. Just like Sean mentioned, they must be technology neutral at the base, at the minimum. But they must, I think they must just leave at defining what crypto assets are. I think there is a lot of confusion just for that, and you don't. I've seen some bodies defining crypto assets with their blockchain name and blockchain technology, which goes totally against the principle and the possible future developments in the technology. So I think at the broad level, we must first define crypto assets, come to a conclusion on that part, right? And without one of the approach which I am particularly fascinated with is the end use approach, where you because crypto assets or cryptocurrency technology is very broad in nature. It can have applications not just in the fintech sector. But it could have applications even in the. I mean, we have seen NFTs. They are impacting the digital arts and other sectors. We can see digitalization of land records. So many things can be affected by crypto assets and blockchain technology. So it's not just about finance, in my opinion. So the government can, at the top policy level, at the parliament level, the government, all the countries that only define the top level principles, that the asset class, the definition, and just recognize it that it's something, in the law of the land. And then the respective regulatory bodies of the various industries should develop further end use case basis based regulations and rules and regulations on top of that. I think that might be a good approach, just because the applications are going to be huge and very varied in nature. That would be my opinion on this front.
If I can just come back on one small point there, I probably would have shared your view that a lot of regulation should be based on end use or use case. But I have to confess that I think my views have slightly altered over time. And I think possibly now the way to look at it is to characterize the risks. It's a bit like saying, let's have a set of regulation for money in the conventional sense. And there are 1,000 use cases for money. And there are different risks in the way that money is represented through different assets, through different, the whole range of risks, and a lot of regulation is about mitigating some of those risks. And so I think possibly as crypto assets evolve, and as the the labels and the use cases are still evolving very fast, it might be more reliable from a regulatory perspective to say, let's protect against certain types or certain risk characteristics, and say if this thing, whatever it is, has these risk characteristics, then these are the measures that need to be regulated. And if there are different characteristics, then slightly different regulations. And actually that's closer to what we do with different uses of money in finance. So it's just a thought.
Yeah, I mean, that's probably the way some jurisdictions have gone. I mean, the risks clearly, like you mentioned, consumer protection, money laundering, securities offering, and what could happen with that. And that could be either whether you need some new policy response or whether existing policy responses are adequate and can be affected for these. I do agree, looking at it it just gets a bit twisted when you start looking at it from an innovation lens and to say, well, we support innovation and you can do this. And then you go about trying to decide what kind of a response should there be for each kind of innovative use. And it's like going into a rabbit hole. It's just so many. I have two questions. One specifically, Sean, I have one question, then there's one question from the Q&A, which is specific for you. It says, how confident can we be that the technology of cryptocurrency won't be used in money laundering activities and CFT?
Quick answer to that is it already is being used for money laundering. And it's not just cryptocurrencies. Indeed, I think therein lies one of the first problems, something Neeraj has touched on earlier, is that this whole crypto space has lots of different use cases, and currencies and payments may be one, and other kinds of assets functioning in different ways as others. And I think one question has touched also on NFTs as well. And so, how can they be art? And there's a plethora of questions around what is this stuff. Leaving that aside, like the traditional world, traditional assets of various forms, they are used for money laundering. Trade finance is a big area where money laundering occurs. High-end residential property in certain countries, including the one where I originated from in the UK, is a problem, and so on and so forth. So it already is being. The only good thing I would say is that actually crypto is not a very good use case for money laundering, because tracking and tracing is so rapid, almost instantaneous. And the likelihood is that in many cases, one will be more trapped by that, albeit that there's a level of pseudonymity and anonymity built in. The reality is, it might have taken years for someone to follow the money through the traditional banking system, especially cross-border, and now it's all instantaneous on blockchains, for example. So actually, it's not a very good means for money laundering, but it already is being, and measures can be taken to either prevent or to detect money laundering in the same way as happens in the traditional space.
Thanks. Sean, I think Sriraj is already there, which means we're close to this session, and it looks like we've just started, but maybe one other question that I think you would be perfectly in position to answer: single regulator versus multiple regulators.
There's no simple answer. Every country has its own regulatory framework for regulating, for example, financial services. The US has many many. I would like to joke with former colleagues from the US and say you've got a lot of sheriffs in town in the financial services space, and you know that they argue that it works for them. Other countries tend to wrap it all up into a single regulator. There isn't a right answer. There isn't a single right answer for everywhere. I'm sorry.
Any convergence you're seeing with EU?
Well, even there, if you look at the proposed markets in crypto assets regulation and the new anti-money laundering package, you actually see two or three groups of regulators, well, multifaceted regulators. There's still a recognition for national competent authorities, so each country having its own regulatory authority or authorities. And at supra sort of pan-European level, you have pan-European regulators, one for banking, the EBA, another for securities and markets, ESMA, a new one that's going to be set up for anti-money laundering agency. And so you actually have probably too many regulators. I would tend towards specialization, because then you can build capacity and understanding of the new technology and then be more enlightened and more innovative about how you manage the day-to-day business of regulating the space. But I stress, it very much depends on the legal structures of and the way stuff is regulated today. Wherever the expertise can best lie, I think would be the simple answer.
Right. Thanks. Thanks, Neeraj. Neeraj, any final thoughts before I hand over to Sriraj?
Yes, just one thought. I was just thinking about something on those lines, Sriram. You earlier mentioned that regulators, and Sean also mentioned that regulators are always in a fix. They don't want to take the burden of regulating it, and taking all the risks on their shoulders. I think how it can proceed is the force coming from the public, from the government side, where public wants crypto assets to be regulated, and then the government takes that decision. The public representatives take that decision that it needs to be regulated, right? And that is where the force comes from, and that is where even regulators also get in line of the thought process. I think that could be a very powerful way forward for regulations across the globe, and that is what I see in India happening. RBI has its concerns, but the government is where we have our hope.
Thanks, Neeraj. Yes, definitely. Very hopeful that there'll be a positive response, and the crypto industry will goes from strength to strength. With that, thank you very much, Sean, for sparing the time and being on this panel. Very, very grateful for your views and insights. Neeraj as well, thank you for taking the time. Very insightful views, and we learned a lot. Sriraj, thank you to IMI, and over to you.
Thank you very much. Everyone, thank you very much for an engaging discussion, and a special thanks to the panelists and the moderator for being here, making up the time and making it possible. Another thank you goes out to the delegates as well who are here with us today. Thank you so much, everyone. Soon we'll be back with the next session.
Thank you.
Thank you very much.
Bye-bye.
Bye-bye.